Happy Saturday, everybody. Guys, we got to talk. We got to talk about this. What in the world? It is painful right now. If you guys are trying to buy, it is painful. Right now, it is just record unaffordability, and you guys know it. We're going to come back to this one. Okay. But first, there was an article in the Tennessean, and in this article, Nashville real estate market, 3 things you need to know. Nashville's still on fire. There was a quote here, and I just wanted to fact check it. I thought it was interesting, and I thought, I'm just going to fact check this one. Oh, yeah, here it is. One data point I did last month was during the last 2 weeks of March, 16% of homes closed above list price. That tells you prices are going up. If you were anticipating prices will go down, that's not the story. Now, what's interesting about this, prices did go up for the last 90 days, month over month, but 16% of listings closing above list price doesn't sound strong. So I thought, well, what if we put this in context? Boom. Here's a chart. Okay, so in this chart, the orange is the percentage of listings that closed lower than list price, and the blue is the percentage of listings that closed above list price. And what we can see, I hate that Excel does this, that just randomly like glitches out and puts some bar there. Anyways, okay, what you can see here is that last year at this time, 58% of closings were going above list. And you remember it was insane last year, peaked at 62% and then tanked. So 16% is actually a pretty terrible number when you look at it in context of the last year. That being said, the trend up did say something about the market. It was trending up and prices were firming and getting stronger. And actually the month over month median sales price did start to creep up, and it's been creeping up for the last 90 days. That being said, 62% of listings closed below list price as of February. Now remember, February 5th, February 10th, 62%. You got to go back to the beginning of January before we saw that huge rush up in demand. That was the best time to get a discount to list this year. That being said, if you're buying right now, almost half of the listings are going for below list price. You should be asking for a discount. You should be asking for a discount, especially if it's been on the market for a week. If it's been on the market for more than a week, ask for a discount. If it's just listed and it's the first weekend, chances are you probably won't get a discount. But if it's been on the market for more than a week, ask for a discount. You need to be going lower than list price. That being said, 25% of listings still going above list. That tells you that realtors are kind of catching up with where the market is. I don't know. Pushing up prices. You tell me what this means. I don't know. Okay, let's keep going. Right now, we're at 477 median sales price. Remember, I said it would stay between 475 and 480. We're there. We look at under contract, 500 to 472. Now, keep in mind, the 500 is showing less confidence. I still think we're hovering around 480. Nothing about this makes me think it's going to go above, but nonetheless, you've got almost 1,400 listings under contract with a median sales price or a median list price of 500. That's notable. Let's look at active listings. Guys, we just hit a new record this year, 5777. We've got to go back to before January to see 5777. And here is the best news. It's in all price bands. Guys, all price bands are seeing, I am about to shut down Excel. This little bar is killing me. But look, we're seeing it in all price bands. They're all going up. So, look, I know that it's tight. There are areas that it's extremely tight, but you got to know that this is spelling relief. Now, I'll also tell you that it is home builders that are bringing on inventory. So people that have been hating on home builders for keeping prices up, they're actually going to keep prices from going up if they keep building. They're going to cap prices. There's not going to be growth because home builders can build and make money at the prices that are right now on the market. That is a great, great sign for buyers. And it's also a warning sign that in the medium to long term, we're not going to see a bunch of price appreciation if builders can build at these prices and make money. And by the way, guys, they're making enough money to buy down the rate. A lot of them are still buying down the rate. So it's not just that they're making money, but they're making enough money to buy down the rate and sell it at that price. Kind of interesting. That tells me there's room to fall even on the build side. And remember, cost to build, replacement cost, in the long run, prices will go to wherever that replacement cost is. So we know now that it's trending, like prices will, and I told you they peaked last week. I told you I thought they peaked. I think they peaked. So we'll keep an eye on it. Let's look at contracts. Contracts are dropping. We're at 2580. It's still trending down. And so, a downward trend in contract volume is exactly what you need with listings building. Guys, this is shaping up to be the best time to buy of the year. We're going to give it another, 2 to 4 weeks. We're going to get into early August where we still have all those listings, but we don't have the school rush. And I think this is shaping up to be a really good time to buy, relative speaking. I'm talking about time to buy this year. I'm not saying that prices are at a good place. You know what I think about prices. But in terms of getting discount, in terms of relative, there are ways to get value, guys. And there are ways to find properties and get more value than what the market rate is. So let's keep going. Closings, we're looking at 25 to 2,700. Look at this gap. It's consistently 200. So we can tell you if it's 27, 26 on July 1st, we're probably going to be 25 to 2,700. Why that matters? June of last year, we were almost at 3,400. In single family homes, we were almost at 3,400. So if we close at 2,500, that's a 900 gap. I mean, guys, we're looking at a 25% drop in closed volume for June. This is just nuts. So to answer the question, how are people affording this market? They're not. Leveraged investors. I've had a lot of conversation with developers and investors. Leveraged investors are by and large stepping out of the market. We have local home buyers that can't afford this market. There is one group of people, though, that can afford this market. And this is Redfin migration data. Look at the net inflow from March to May 2023. LA, Chicago, San Francisco, San Diego, DC, Seattle. Guys, these are all higher priced, more expensive places. And we're looking at just those 4,000 people. Now, this doesn't necessarily translate to purchases, but let's just assume for a second that it is. Let's just assume that Redfin is showing how many people are actually buying homes here or how many homes are being purchased. Guys, 4,000. If we go to the 2023 data and we look at March, 2,400, April, 2,200, May, 2,700, we're just over 7,000. Guys, 4,000 homes purchased from these higher priced places is more than half of the closings in March, April, and May. So look, I'm not saying that this data is accurate. I don't know if it is, but I'm telling you, there are a lot of people moving here and they are paying for these houses. Now, one other thing to think about, even though the income doesn't match up with the affordability on a monthly payment per se, a lot of people are selling their homes and getting outsized ability to pay down payments. And so they're able to put more down payment down. Now, I could do an analysis on that. I haven't, but that's another factor here is we're getting a lot more cash buyers and high down payment buyers. And we can look at that because the truth is nobody can afford this market. Nobody can afford this market. It's so expensive. And that leads me to a post by Jay Parsons. Now, he is RealPage. They monitor a lot of large multifamilies. And here's what he said about Nashville. He said that this environment right now is a favorable environment for renters because they suddenly have plentiful options. Now, he believes this is temporary because he calls it a supply-demand mismatch. And he's basically saying, look, right now, there's way more supply than demand, but it's getting absorbed fast. And as soon as all that supply comes online, it'll tighten up very quickly. So there's a saying in the investor market, survive till 25. And guys, a lot of people are not going to survive till 25. I know, and even in multifamily, everybody talks about office being bad, but I'm telling you, I hear anecdotes. There's a lot of developers, investors, multifamily investors that are struggling right now with their properties. I'm just telling you, and I don't know who they are. But I just hear anecdotes and it's out there. It's something to keep an eye on. But just to pretend like this is just an office thing in commercial, it's not. It's going to hit multifamily. And rents dropping, depending on how far they drop, will impact single family. If investors have to liquidate and they have to start liquidating single family, that will impact, obviously, single family pricing. Airbnbs, guys, let's look at unemployment. Unemployment is starting to tick up here in Tennessee. Now, I will tell you, context-wise, This is obviously a big move up, but we saw it happen in Q4 and it ended up being nothing. Okay. The other thing is 17,000, relatively speaking, is a pretty low number. If we go back to 2019, we can see 21,000 to 16,000 was kind of the norm in 2019. So we kind of have to see something break above 21,000 to really turn heads here in Tennessee. But if we saw that, it wouldn't surprise me at all if this starts really bleeding into housing. Now, at the same time, if we start seeing a recession and travel tightens up, these Airbnbs, we talked about it, there's 8,000 that could come online very quickly. And, I think short term is just a very high risk market right now. Personal opinion, it seems very risky. Out of all the things, Airbnb, and it could end up being a great place of supply in the next 12, 24 months. So we'll see. But nonetheless, supply's going up. These are all good things for buyers. It's setting the stage for relative value. If you are looking to buy and you can wait another 2, 4, 6 weeks, you will probably be able to get way more bang for your buck than you would if you're trying to buy right now. I think there's still a last minute scramble to get in that school zone, but we'll see. We'll see. Last thing, we're going to do another live stream on Wednesday. We've been able to connect with many of you. It's been a lot of fun. It's just a Nashville neighborhood deep dive. If you have questions about a neighborhood, we'll look at it. We'll give you our thoughts. We'll look at it from a data perspective and any anecdotes we have, knowledgeability we have on the area. And it's just a fun conversation. We have a really good time. Mark your calendars, the 21st, Wednesday, the 21st at 7 p.m. So for those of you who didn't get the notification last time, that was my fault. I deleted the link and had to repost it because I screwed up my StreamYard account. Anyways, that being said, thanks for watching. Hope you guys have a fantastic weekend.